Hi everyone and welcome back to our YouTube channel. We're very close to 1000 subs and I'd like to ask everyone who's watching this video to subscribe if you haven't already. We upload educational trading related videos with a lot of free and valuable information. If you'd like to check out what else we do, you can also head over to our website Trendline Forex and see all of our courses, mentorship, signal services and so on. Today I'll talk about reversals in the market, how to spot them, how to take advantage of them, and basically what is the best way to trade them. First I'll show you an uptrend reversal, then we're gonna have a look at a downtrend reversal example as well. And make sure to stay until the end of this video because I'm also going to show you where to enter, where to place your stop loss and take profit levels also. Before we start, make sure to join our free Telegram channel and stay up to date with our daily analysis that we send there. Uptrend reversal. Now, I'll assume that everyone knows how to read a trend, what is an uptrend and downtrend, and what is a sideways market. If you're not familiar with all of that, then the least you can do is check out our free beginners course and go through the material there. We've also got a full detailed trend trading course which could help you with all of that as well. Let me know in the comments down below how important do you think trend trading is in general. Right, so when we're looking at an uptrend, basically we want to see price creating higher highs and higher lows. This is exactly what we have. However, there's always a time where the market will change its direction and it will start going in the opposite direction. What are the signs that the trend is about to reverse? Well, simply said, that's when we have a breakout of previous support. Remember that we're looking at an uptrend example. When price is creating a higher structure, like it is in this case, as soon as the pullback ends here, you want to see if it will break above its previous highs, which will then confirm a continuation to the upside, right? But if you see price coming up here and struggling to break above or forming a lower high instead, then that is a sign for a possible reversal. The next thing to watch out for is eventually a break of this previous support here, which is basically the most recent low. If you do see that breakout, which means we want to see a close below that level, that's when the reversal is confirmed and you can now look for a downside continuation. As long as price is trading at or above this level right here, we're not looking for short positions. So let's have a look on the chart and see an example over there. So this is the Aussie dollar 1 hour chart and I think we've got a pretty decent example of what I was just explaining a second ago. Right, what we have here is an uptrend, price obviously creating higher structure, managing to break above its previous resistance every time it reaches it, and that just puts us into a confirmed uptrend, a strong one as well. So what we're looking for right now is obviously another pullback since we've recently broken above this previous high. I would normally expect another pullback and a continuation higher, okay? And I would expect that every time until I see some of the signs that I've mentioned in the previous slide. So here we have another higher high and yet another one, and it looks like price is continuing that upside momentum, okay? Now we have another pullback which should at one point and it should break above its previous highs right up here, okay? So moving on, let's see what happens next. We create this little level of consolidation here. Until this point we're still in an uptrend, okay? So what happens here, okay, I'm gonna zoom in a little bit, is price has recently created this most recent high. It then made a pullback. It held sideways for a little while. It began the next move to the upside, but this time it couldn't break above this resistance, okay? Instead of that, we have a lower high, Alright, we've also got this candle with a long wick to the upside, which actually shows us that the market has tried to break above that resistance, didn't manage to. A lot of buy positions were probably closed here, and at the same time a lot of sellers probably entered the market as well, and that's why we've got this push down and price in fact breaking below the previous support right here. I'm just going to place a horizontal level so we can see that better, and what we have is the pattern that we're looking for. Okay, we've got a high, we've got the pullback, then we've got a lower high than this previous one, right? And then we've got a break below the most recent support. Okay, from now on I would actually expect for price to continue lower. Okay, so if we move on, what happens next is we've got a retest of that level right here, and then price melts to the downside. Now even if there's a pullback, I would actually expect to see a lower high than this previous one and a continuation even lower, and that's because that's how the concept works. If you do have a lower high in an uptrend as well as a breakout of previous support, that normally means that uptrend is coming to an end and a downside move is about to begin, like in this case. Now we're going to go through a downtrend reversal example as well, and then we're going to come back to the chart and see what are our entry options, how do we place our stop loss and take profit levels in order to find the best opportunities possible. Very similar to the previous example, we're looking for the same signs of price losing strength and potentially changing its direction. This time though, we have consecutive lower highs and lower lows. When we see that price, instead of breaking below its previous lows, is actually forming a higher low, that's when we could expect a potential reversal. Obviously, the next thing to look out for would be a breakout of previous highs, previous structure, which will then confirm that a reversal has now taken place. I'll move on to the chart again and we'll go over an example of that. Here is the Canadian dollar yen pair again on the hourly chart, and before we proceed with this example, the higher the time frame is, the stronger that a reversal would be. What we like to do at Trendline Forex is obviously we do a top-down analysis, so we start from the higher time frames, and we like to execute our trades on the hourly chart. That's why I'm giving examples of the hourly time frame. But like I said, that works on pretty much all time frame. The only thing to know is that the higher the time frame is, the stronger the reversal signal would be. So what we see here is, price has been trading in a downtrend for quite some time. We've got recently we've had this downside move here as well, and we like to follow how this situation develops. And what would normally expect is obviously pullbacks every now and then, and price continuing to break below its previous lows like it has done right here, and on multiple occasions. Right, so let's move on and see what happens next. Here's the next pullback, and let's see if price manages to break below its previous low. Okay, that's exactly what it does, so that only confirms that we are still inside of a downtrend. And meanwhile, if for example you're day trading or scalping, what you can do in this case is to drop down on the lower time frames and look for short positions only. But since we are looking at the hourly chart, and let's say we're looking to make our entry here on the hourly chart, I want to spot that reversal, because the idea for those reversals comes from the higher time frames. Let's say you're looking at the daily time frame, the weekly time frame, or maybe even the 4-hour chart, and you see that price is approaching a key level. Okay, and although it is moving downside, you see that, let's say for example right here, there is a key level on the higher time frame, which is a strong support, and it has held price above it in the past. So you would normally expect that at this level you're either gonna have at least a deeper pullback, which will give you that reversal opportunity, or you might actually have a full trend reversal. So let's see what happens next. Right, we're still in a pullback. We haven't haven't broken above any previous resistance, so that means we're still in a downtrend. Okay, it looks like price has begun the next downside move, but what happens instead of that is now we have a higher low, okay, higher than this previous one. Now if price breaks above this level right here, which is our resistance level, I would normally expect that we're probably gonna continue higher after retesting it, and then possibly give me an opportunity to anticipate the next move to the upside. However, if I see price respecting that level again and continuing lower, that only means that I'm still in a downtrend. Okay, also sometimes you could have a breakout but not a continuation higher, so that's why I'll talk about entries in the next couple of minutes. But the most conservative way to trade this would be to wait for that breakout, that retest, and then after the retest, that's when you can enter a long trade. Obviously it would be very aggressive to enter on the breakout straight away, and still there are traders who like to do that. It really depends on you and your style of trading. Okay, so going ahead, what we see is price finally breaking above that resistance, which confirms that reversal, and we could now expect a possible continuation higher. That's exactly what the market does next. After the breakout, as you can see, it began an upside impulse. And if I squeeze the chart out, you can see that reversal pretty clear. We've also got that next level up here where I would expect for price to react in some way and either break above or give us a rejection and possibly even go back to the downside again. Understanding how the reversals work, why did they appear, and when they appear is only a part of the plan. What you need to know next is how to take advantage of those reversals. Basically, how to find the best trading opportunities by waiting for the right entry with the best risk to reward ratio when the odds are in your favor and also you've got an edge over the market. And how does that happen? Well, that's by using different tools of technical analysis, whether it be pure price action, technical indicators, Fibonacci levels, trend lines, support and resistance levels, candlestick patterns, pretty much anything that you know it works for you, anything that you know how to use properly, putting all that into a strategy and executing that with discipline and consistency. This is the only way that you can make money from reversals. So I believe there's two main ways how to trade the markets. It's either conservative or more aggressive. Okay, so back to the uptrend reversal example. This time we're looking at the pound Aussie 1 hour time frame again, and I want to go through a situation where we see a potential reversal, we see a confirmation of this reversal as well, and then we try to enter a trade and see what will happen next. So we are currently in an uptrend. Price, as you can see, continues with breaking above previous resistance, and as of right now it doesn't give us any signs that this trend is about to reverse. Okay, right here we've got this pullback and price continuing back to the upside. Okay, this time though, what we see is that market creates a lower high, and at the same time we've got this level right here, which I'm going to place a horizontal line at. Okay, and we've also got an hourly candle closing below that level as well, after not being able to create a higher high than this previous one. Okay, so now we've got a lower high and we've also got a breakout of previous support. Okay, so one way to enter this trade would be to enter on the breakout immediately, which I would classify as, a more aggressive style of trading. And if you make your entry right here on the close of this candle, even beforehand, you need to know where you want to place your stop loss. Now, again, a more aggressive stop loss would be just above the most recent high. In this case, this is about 59 pips of stop loss. Okay, Okay, so when it comes to targets, you know, you can obviously go for this level right here because you've got previous structure at this point. You've also got price rejecting and reacting to that same level here on a couple of times again. And so let's say you could look for 70 pips of take profit, and in this case you would have 1 to 1.2 risk to reward ratio. Okay, it really depends on what's the picture on the higher time frames as well. Let's say we go up to the daily time frame, and what we see here is that price is reversing because of this previous high. Okay, so we've got a key level right here on the daily time frame, which is 1.89 pretty much, and that's why we see that reversal. So the least that price will probably do next is, you know, kind of a deeper pullback, or it could actually come all the way down here. Okay, so moving down to the 4-hour time frame, you've also got this previous level of support, you've got another level right here, and obviously you've got this level all the way down here as well. Okay, so we're looking at previous lows from the higher time frames. Going back to the 1-hour time frame, that means that, you know, we could possibly go for a target all the way down here, which in this case it means we're going to be looking at 1 to 4 risk to reward ratio. Okay, so since we are using the more aggressive stop loss, let's say we're going to be looking to exit this trade as quick as possible. So we would rather you know, look for targets down at this previous lows right here, so about 1 to 1.5, 1 to 1.4 risk to reward ratio. Another way to enter this trade, if you're looking for an entry on the same time frame, which in this case is the hourly chart, is to again enter on the close of this hourly candle. You can then use a bit wider stop loss above this key level, which is the previous high, and then again, let's say you're going to be looking for targets all the way down here. Okay, so when it comes to an aggressive entry, I would say, you know, entering straight after the breakout is what you're going to be looking for. Okay, you can also look for you know, wait for price to break below this previous support right here, come back for a retest, and then look for an entry, which I think is a much better option, and then you can potentially anticipate the next move to the downside. Okay, so let's see what happens next. Price continues lower, it makes a pullback, and if we're looking for that conservative entry, then that means we want to see a retest of that level. This is exactly what we've got right here. Okay, at this point you can look for you know, a candlestick pattern or a chart pattern. It could be a double top, for example, on the lower time frames, or like in this case you kind of get like an engulfing candle right here. You've also got a long wick to the upside, which also indicates for a possible downside continuation. Okay, what happens next is price just melts to the downside after this retest, and it eventually gets all the way down here to this previous level. Okay, so a couple of entry opportunities on the same time frame where you've got the reversal, one on the breakout immediately and another entry opportunity on the retest of that breakout. What you can do as well is you can wait for that breakout, but then look for an entry on a lower time frame. So I'm going to go back to the moment of the breakout right here. We're looking at the hourly chart. Right here is where we've got that breakout happening. Then I'm going to drop down to the 15-minute time frame, and I'm going to be looking for price to continue a bit lower, come back, retest that level, and then on the retest you can look for entry opportunities. And again, you would have you know, a few options of how to manage that trade, and also a few options of different risk to reward ratios, again depending on what kind of trader you are. Okay, so right here we've got the retest of that level. Now a really aggressive entry would be to place a pending order at that level, and so as soon as price hits that level, it would then trigger you in that order, and it would be in a short position at the best level possible. Okay, also you can look for an entry yourself, but as you can see, price continues breaking below previous structure. You can definitely use counter trend lines as well, and let's say on the breakout of the trend line here is where you want to enter a short trade. So we place this as it is right here, you can use a very aggressive stop loss just above the wick of this breakout candle, because you see that the momentum has started, and you can also use a stop loss above the level itself. And again, when it comes to target levels, you're looking at those next support levels on the higher time frames, whether it be this one right here or again all the way down here. You know, you've really got the chance to find these big take profit levels, and only one or a couple of those trades per month will actually improve your results a lot. And as you can see, finding those trades, it really begins with spotting the reversals and also looking at the higher time frames as well. Okay, so hopefully that was helpful. Have an idea of what to look for once you spot a reversal. Let me know in the comments down below, do you trade reversals or do you prefer trend trading only? Also, if you want to learn the way we trade, our exact strategies, and how we find potential trades in trending markets, whether it be reversals or whatever it is, you can head over to our website and look at the full Forex training package, which is under the courses section, and that's where you can learn each and every tool that we use to analyze the market, and you can also start using our specific strategy with clear rules that you can execute consistently, and definitely start making profits. In this package, you'll get 7 courses, over 160 video lessons, 7 hours of mentoring with a pro trader once you finish your trading, and also you get a 1-year subscription to our Signal group, where we send out daily analysis of our watch list and potential trades that we look at. Okay, hopefully that video helps and you found it helpful. Make sure to give us a like, don't forget to subscribe to our channel, and also check out all of our social media links in the description of this video. Follow us on TradingView as well if you want to see more trading setups and more trading opportunities. I'll see you guys in the next video. Take care. Thanks for watching. Please don't forget to watch our last 2 videos, where you can find more valuable information. Check out our channel for more trading related videos. I wish you all a successful trading, and I'll see you next time.